Today I am joined by Robert Gaskell, who is related with this Pillar Project and 2030. Thank you so much for joining me.
Thank you very much. Yeah, I can tell you a little bit about that if you want, and just who I am.
Yeah, absolutely. Let's jump in with talking about who you are and a bit of your role within this security token ecosystem.
Sure. So I started, 2030 started a few years ago, and in July 2017 we started the Pillar Project. That was done through an ICO, so we raised money for this project, which is an open source project, and it's a project that's a gift to the world. And 2030 being a portfolio studio of different companies in the blockchain space, the second project we looked at was a tokenization of equity using equity, so tokenizing equity in companies. And that's taken over a year, so it's been a long journey to get to the point where we are now, which is where we have the first regulated process and going on to an issuance on a collaborating with regulated exchanges like the London Stock Exchange and so on. So it's taken a long time. I joined the company in around July 2017. At that time, I was, in all startups you wear many hats, but I was doing more of the operations side and more of the company setup side and setting that up, setting up compliance, setting up all the operations. And for me, I had the title of like a COO or something, but right now my job's really split between the different areas of 2030, and I have a role of the foundation president of the Pillar Project. So I've handed over all of the operational side and execution side of the Pillar Project now to the team that we have in place, a fantastic team running the Pillar Project. Now last year I was working also on the tokenizing the equity project and using something that the actual project name is Token Factory, and getting the partners in place, getting the regulation in place, working with all of those, the legal side, the third parties that allow us to do this token issuance. And then now this year, because we've gone through that process where we've done the first, and we're now into building up an operations team to run that project. Now I'm moving into asset management. So now I'm setting up, and I'm the CEO of 2030 Asset Management.
Okay, so really covering all sides of the ecosystem in a way.
Yeah.
Now there's something you touched on during that which is very interesting, and that is the London Stock Exchange. So it came out very recently that you guys are going to be the first security token offering issued on the London Stock Exchange.
I would say more tested right now because it's not like you can log on to London Stock Exchange systems and buy our token.
Okay.
I don't want people to think that.
Yeah.
The token itself is the first token, which is the equity of 2030 Holdings, this portfolio studio holding company. The first token is effectively only being settled and tested through London Stock Exchange's Turquoise platform, with the view in the future, and this is something that we're working on together, we're collaborating with big exchanges, big regulated exchanges like that, is to bring this future liquidity to the market with tradable tokens and so on. But it's something we're working on together.
It's very interesting, especially when you see such big names and institutions attached to these types of developments.
Absolutely.
So that kind of leads us into a question of institutional adoption. More adoption in general, actually. We currently have issuance platforms. We have exchanges online or trading platforms. They're relatively rudimentary, and there's not many, but they do exist. We kind of have custody. We don't have the best solutions, but there are some custody solutions. What piece of the puzzle do you think is left before we see mainstream adoption and particularly institutions feel comfortable moving into the space?
I think there's still a lot to do. I think the custody space is still like a technical space and not a full operational space. You can tell that by the fact that there aren't many platforms that are insured. There are platforms that claim to have insurance, but actually what they have is just cybercrime insurance. They don't have insurance that actually is front to back in the full platform.
Okay,
so
it's not good. Do you think you need to see sort of the traditional custody names move into crypto before institutions feel comfortable? Or do you think the existing crypto and custody solutions could become well developed enough that institutions feel comfortable?
That's that's just sort of you can only kind of guess really what might happen. But I think there may be some very strong technical custody solutions that some of the larger custody players in the market buy or lease or rent or whatever, and then white label themselves. I don't think they're going to build up their own technical solutions. I've spoken to some of the big banks that have custody departments for their clients. They really don't know how to deal with tokenized assets and so on. They need some help on that, and I don't think their technical teams are set up to do that.
What are they thinking when they look at this? Are they thinking this is big and we need to start moving into it? Or are they at quite a complacent space at the moment?
It's client driven. So all of the decision making about what they do is client driven. If a client says, I now have 5% of this thing called 2030, which is a tokenized equity, I need to store my tokens, you're my bank, you're my custody partner, you sort this out for me, they're going to have solutions for this. They understand it's coming, but they say that they're watching the market. They like to say that we're watching the market and we're seeing what's happening in the market.
Yeah. So they're more working on it.
It's investor driven though, and the fact is there aren't a lot of tokenized assets right now. There's tons of projects and there's lots of things going on in the tokenized space.
Yes.
So you will see some of the smaller custody providers doing this. But yeah, there's been some announcements. I mean, with Northern Trust and a few others that have announced that they'll be compatible to hold crypto and tokenized assets. Obviously Fidelity has also announced the same.
Yeah.
So there's some of the bigger players are getting in there, and the other banks and other institutions are looking at it and wondering whether it's something they should invest in. They're not quite sure.
Yeah. Still sort of on the fence, waiting to. More moving with potentially mergers and acquisitions in the future and not putting their reputation on the line by creating something themselves.
Yeah, exactly. And they're not going to jump up and say, we are the token custody platform of the world. No, they're looking at the space, looking for innovation, and where there's innovation, they buy innovation. I think that's what will happen.
Because in my mind at least, it's far easier to custody a security token because if you hold Bitcoin, then if you lose it, it's gone. No one can ever reclaim it. Whereas with a security, you always have a cap table and you can just reissue the tokens.
That's correct, yeah.
In a way, and I know I'm speculating far into the future here because legally you need a custodian today. Can you see a future where you don't even need a custodian? If you have a token which can be reissued in a cap table, isn't that somewhat supplanting the need for a custodian?
Absolutely. Everything we're doing is taking out and disrupting different markets. But as we have seen, and as we've been in this space for a while, we know that when we make predictions about, say, insurance being disrupted, banking being disrupted,
it takes
longer than you think. You think that a technical solution, as you just described there, can come in place, and then everybody will just use that. It's about trust.
Yes.
Right now, people trust these institutions. We, who are critical of some of these institutions, don't trust them as much as other people in the street.
Yeah.
They have this, huge 99% of the market which is trusting them right now. If we build trusted solutions in the blockchain space with a huge amount of quality and quality of people behind it, but also we're starting to see it now as well with our partner in the tokenization platforms. Just the chief executive of the London Stock Exchange has just gone onto their board. When you have people with gravitas, people coming into the industry, coming into this tokenized industry, coming into the custody industry, and putting their rubber stamp and saying that, then obviously clients and investors will start to trust this.
Yes.
And then of course it will disrupt certain industries.
It's an iterative movement. You can't jump to the end goal.
Yeah.
You certainly, from a legal perspective, you have to have a custodian.
Absolutely.
So you'd have to change the law first. I'm just kind of speculating for the future.
But there's people looking at the laws as well, and looking at changing laws. So laws around, prospectus rules, custody. There's lots of things that settlement. There's lots of things that people are looking at to streamline the future.
Yeah.
And bring in this whole, global liquidity, global safety around digital assets. It'll be a fascinating thing to watch over time. But I honestly think the big names in the space will do what they can to basically stay in the space. I don't think they're just going to sit back and let everyone take over.
No, it's more just interesting to understand their perspectives to taking part, whether it's sitting back, watching it and mergers and acquisitions, which is the role I think they're going to take, or whether they're going to be building out their own solutions. It kind of depends on the company. Now, you mentioned custody as one of the big issues that is blocking institutional players from entering the space.
Yeah.
And you also said there's quite a few things. What are some of those other things?
So the quality of the exchanges, I suppose, is what the other thing, and security around those exchanges, support around those exchanges, operations and governance and control around those exchanges. Again, it's a trust issue. The mainstream won't come to those exchanges with their tokenized assets. So if you think that everything's just going to change very quickly in the next year, it's not, because they have got so much to do, much to do in the crypto space.
What do you think about someone like SharesPost being involved there? Because they're the biggest pre-IPO exchange in the world, and they're moving in security tokens. So that's a somewhat trusted name related to security tokens.
Yeah, I think it's a good idea, and I think that we need more companies like that coming into the space, because effectively each time that happens, that steps another leg down the journey of moving towards this very much more liquid world, which is what we want.
Absolutely.
No, I think that's a great play for them.
Okay, I was going to push you on dates and predictions, but we're relatively short on time, and I know you don't really want to, so let's not push on that. Instead, let's talk about the market opportunity. So you have issuance platforms, you've got exchanges, crowdfunding platforms, custody solutions, you need insurance. There's so many different infrastructure elements which need to be built out for the market to flourish. In that kind of technology stack, you're looking at this from an investor's perspective at the same time, being part of 2030. Where do you think the most value is going to accrue?
Wow. I think there's going to be value full stack.
Absolutely.
I don't think there's going to be more value in... people in the industry will always say, invest in the network. The network is where you make the most money. The hardest part is front end and so on. So you look at you were talking about there's like a full stack of investment side, investing in companies, investing in assets. I think the custody players that do really well in this space will make a lot of money. I think the tougher angle is the arranging and bringing investors into platforms and things like that, and bringing quality companies for investors to invest in. We're doing the tough part here at 2030 because we're on the front end of the arranging part on our token factory solution, but we're also looking at custody as well. We're also looking at insurable custody solutions that we can bring into, and then we create a full stack, and then give that to the industry effectively, to use. So I think there's opportunity value in all those areas, but if you're the shrewd investors always talk about invest in the underlying network, because that's kind of repeatable money, and that can bring in better returns than maybe looking at some of the front ends, where there's a lot of players, there's a lot of noise.
So by front end you mean issuance platforms, crowdfunding platforms?
Yes, yeah.
And by back end you more mean custody, exchanges?
It's exchanges, custody, the transferability, all those sorts of things. Because once you get the technical solution in place, you don't necessarily need a lot of human capital to keep it running. So then obviously your profits are better. When you're talking about some of the front end companies, they need more human capital to bring in the client service part, the investor relations part, all these sorts of things that bring in a lot of operations controls. That obviously potentially has less profit. Yeah,
I completely agree. When it comes to the issuance especially, I think it's going to be heavily commoditized over time, because it's essentially just write a piece of code and then just bring in as many companies as you can to use that piece of code. It doesn't cost much once you've built it, and then essentially it's an advertising campaign. Whoever can bring in the most to use their code is going to win.
So the
front end, it drives the
front end
profits
have
down.
To pay for the advertising campaign, so their profits get hit.
And there's a lot of competition as well.
If you're a back end guy, just basically you created the tech, and you don't have to do any advertising. You're the back end, provider. You don't have to, obviously, you don't have those costs.
Okay, I like that answer. When we talk about exchanges, it's one point of interest because it's something which, when you talk to people, they don't necessarily immediately understand that stock exchanges right now really just have stocks, maybe REITs, which is bundling real estate together, but it's not a variety of different things. People talk about exchanges, security token exchanges, as having the ability to trade shares, bonds, real estate, derivatives,
Funds.
Yes, basically anything of value that you can tokenize, you can trade. Do you see it playing out that all of these assets are aggregated onto the same type of exchange, or do you see sort of like a walled garden system creating itself again, where stocks, bonds, derivatives, commodities, all in separation?
I'm giving you a little bit of insight here with the other things we're working on, because we're looking at also creating indexes of exactly what you're talking about.
Okay.
So funds, real estate, because then you can have that could be listed on different exchanges and allow you to then get access to underlying assets that are tokenized. And so I'm sure there are other people thinking of this and working on this as well. But the idea there is that you're presenting things in a different way and in a safer way to the investment community. But your question around will it be an exchange that has every single type, and then you just filter for funds, you filter for property, you filter for art, you filter for cars, you filter for whatever. You know, I mean, it really it depends on the solution. I mean, you can imagine things like SharePost or others where they just everything. They'll try and encompass everything. And then they'll have a way of a nice visual interface into seeing and sorting through that. I'm sure you'll have specialist, property exchanges, or you'll have specialist fund exchanges or something like that, where that you can have. But overall, I think it'll be both. It'll be all of those types.
Yes.
But I don't think there's going to be just one big Uber sort of like Google or Facebook exchange that everyone has to use.
Yes.
And
We like having choice when it comes to financial services.
There's going to be choices, there's going to be choices. There's going to be lots of players. There's thousands of industries in thousands of companies in financial services.
Yes.
It hasn't all gone to one Google thing. It hasn't gone to one UBS or one,
and it shouldn't.
HSBC.
With financial services, you don't tend to have a winner-takes-all market.
There's lots of competition because there's lots of small niche angles you can take. The bigger banks and financial institutions, they want to try and mainstream, commoditize, take out bring value and just get profit. The smaller players in the financial space, and you see them springing up all the time, are trying to find niches, trying to find gaps in the industry, trying to exploit different areas of finance to give a different type of solution to investors, get investors excited.
It's a very interesting answer. So, I mean, like with everything, it's going to come from demand. So as you say, you could have one company deciding real estate is our thing, one company could decide commodities. And then eventually it will just, whether it's walled gardens or not, will depend on where the investors go. We essentially create those walled gardens. So maybe more interesting is, of the people you speak to, what are they trying to build? What's more common? Are people trying to focus on an individual type of exchange? Or are people more thinking, why not build it all in one go?
Both. I think, you've got people that are looking at the token standards, and that's something that we did start here in Pillar, in our Pillar Labs. We started something called DASA, which is the Digital Asset Standards Association. Those standards of tokens will be applied to any type of asset. So if an exchange decides to conform with the DASA standard, which we're talking to all of the major exchanges and there's the minor exchanges that are in the space right now, we've got them all in a Slack group, we're communicating, we're setting up a whole project around DASA to bring in this concept of global liquidity with a token that is standardized. And with that, you will have exchanges that maybe just decide to concentrate because of their investor community, again investor-led, on the property side. So they're just doing property, tokenized property. But you'll have other exchanges again that they take the tokenized standard and it's any type of asset and they don't care. Any asset that's got any value. It could be anything.
That makes a lot of sense. And at the end of the day, as I say, we're going to be the ones to decide.
It'll be investor-led though, won't it?
Yes. If we want to go to this platform and it happens to be real estate, we're going to essentially build those walled gardens for ourselves. You mentioned funds. You highlighted it. So for me at least, and you may disagree with this, so I'm interested to hear your thoughts. For me, tokenized funds are really the first point of disruption we're seeing. The ability to...
Okay, yeah, go on.
As in, if you go on something like Open Finance Network, there's 4 assets and they're all tokenized funds. And most of the opportunities I'm seeing more of that than any other individual asset class. Because it makes sense, security tokens add liquidity or facilitate liquidity. You take the most illiquid asset class, provide a bit of liquidity, even if it's poor, it's still better than holding something for 10 years. So you've got a monumental improvement. Okay, that's just interesting. So my question was going to be, what do you think is second? But actually, if you're not seeing that as first, what do you think is the first point of disruption?
First point of disruption. I mean, you're talking about an industry that is being disrupted, and the funds industry. I think the funds industry is going to be one of the slowest to actually disrupt.
Okay.
Because the administrators and the service providers are not as quick as maybe other industries at taking some of the standards that are needed to be able to hold just a fund has to have a share registration. Okay? Share registration systems right now don't have the capacity to be able to handle tokens. So there's very few service providers out there. Again, very small niche ones, yes, but the major service providers out there don't have the ability to do this yet, and they're resisting this. They're wanting people to stay within the standards.
Of course, it benefits them.
Exactly, because there's a potential there that
they're going to be disrupted.
Yeah, it takes away some of their industry. So I honestly think the funds is one of the biggest struggles. I think the tokenizing of equity has been done. It's been done, and that's going to continue at a massively accelerating rate. Tokenizing property has been done, again, at a massively accelerating rate. So I think the disruption is going to come in the financing right now, not the global liquidity, because that's where the exchanges come in, as we talked about earlier. But the financing part is being disrupted right now, definitely on equity and property. And I think funds is very small, but it'll grow over time. I'm going to be pushing very hard with friends I have in the funds industry to try and move towards a tokenized funds model.
It's very interesting you say that, because I interviewed Jamie Finn from Spice VC, and he was very much pro on the fund side. So it's always interesting to hear people. I mean, so in terms of being early, he was saying for him at least, it's one of the earliest points of disruption. So I'm not saying you're wrong, I'm not saying he's wrong. You're both people who know a hell of a lot about the industry. So it's always more interesting, I find, to have differing opinions than just agreeing with each other on everything.
Sure. No, I think when you're in an industry, like he's in the VC fund industry, you can be very focused. I'm not criticizing him at all, because I mean we're all, but we are very focused in our particular areas, and my area has. I'm only just moving into now the funds industry, having spent a long time in my previous careers in the funds industry, moving back into the funds industry. I'm seeing a huge amount of compliance, regulation around funds that wasn't there, a long time ago, and they're making it harder and harder to do these things in something that's highly regulated and highly controlled. Yes, there's opportunities for tokenization. It's going to happen. There's going to be many token funds that launch, or funds that are tokenized. We hope by the end of this year. But other things are moving much faster that don't have such tight regulation.
Okay, it'll be genuinely fascinating to see how this all plays out. Do you have a particular asset class which really jumps out at you as potentially the biggest opportunity?
I think the biggest opportunity right now is equity. Equity right now. I think there's an interesting move as well to, and I'm looking at this as well. There's an interesting move to look at the derivative market. The biggest market in the world is derivatives. Many times
considerably
than any other market. Tokenizing that has some benefits, but there's some game changers as well in the derivatives. Now, there's not many people working on that, I would say, unless you know a load of people.
I do not. I've never actually spoken to anyone who seems to be addressing that market, even though it is, as you say, considerably larger than any other market.
but it's an I do know a couple of people that are, working on stuff, but nothing kind of
Why is that?
serious at the moment.
If it's the biggest market, you'd expect just on a very basic level that lots of people will be working towards solutions.
I think it's because of this issue of, not the tokenization part, not necessarily adding a huge amount of benefit, but there are some benefits that are going to get unlocked with tokenization. It's just no one can kind of see it right now, and you've got to get in there and start working with it, I think, and that's where you'll start to see the opportunities. Right now it's hard to imagine because of the way the market is kind of controlled between the big institutions. But yeah, there's going to be some tokenization in derivatives, which will become very interesting. When that starts to unlock, I think there's going to be quite a few scared people in the industry.
And that's particularly more on the institutional side. What's interesting is everything in crypto so far has been driven by the average person. Whereas speaking to the average person, derivatives don't even begin to make sense.
No.
So maybe that could potentially be one of the reasons as well. Just coming off the top of my head.
You can't
because
just say,
it's retail driven.
derivatives, and I've not worked in the derivatives industry.
Yes.
The derivatives people are paid very well. They're sitting in banks, financial institutions. They're not stepping out and saying, "Oh, let's tokenize this." There's someone I know that's come from the derivatives world who's quite interested in seeing whether there's a disruption angle to tokenization. As I say, there are people like looking at it, but it's not a big industry. It's not something that's coming quickly.
Okay.
But
so something you've got your eye on, which a lot of people aren't necessarily looking at.
Yeah, I think so. I'd like 2030 to do something in the area. Once we've nailed the funds in other areas.
Some interesting developments to come then.